Good evening. Today we are going to discuss the SLAuS 700, 701 and 705, the audit reporting and the forming an opinion and reporting of the financial statement, communicating key audit matters, CAM, and the modification to the opinion as well. So let discuss the topics with you all. So as I told you, so now we're going to discuss the SLAuS 700 series audit reporting. So you can see SLAuS 700 revised forming an opinion and reporting on financial statements effective for audits of financial statement for the period beginning on or after 31st March 2018 onwards. The all three standard which is applicable effective for the audit of financial statement for the periods beginning on or after 31st March 2018 onwards. So you can see SLAuS 700 forming an opinion, SLAuS 705 modification to the opinion, and SLAuS 701 CAM paragraph, right? Key audit matter. It is mandatory for the public listed companies, the public interest company, PLCs, right? So the important definitions are there. General purpose framework, a financial reporting framework designed to meet a common financial information needs of a wide range of users, right? Here, general purpose financial statement, right? General purpose financial statement in the sense it means financial statement prepared in accordance with general purpose framework, right? You can see the pervasiveness is important, a large impact. A pervasiveness is based on the auditor is determined based on his professional judgment whether such misstatement is pervasive or not for the given circumstances, right? Describe the effect of the financial statement, misstatement or possible effects of financial statement of misstatement. mm, if any, that are undetected due to an inability to obtain sufficient and appropriate audit evidences, it means scope limitation, right? Pervasive effect on the financial statement are those that in auditor's judgment, it means auditor's professional judgment. What means the pervasive means pervasive effect is on the financial statement are those in the auditor's judgment, based on the auditor's judgment, are not confined. Confined means limited to specific elements, accounts, balances, or the items in the financial statement. It means it is spread over there. It means not limited for one or two line items, not rather than limiting, it is not confined for the specific elements. If so, confined, represent or substantial portion. That means total asset, out of total asset, 80% is the mistake, right? In relation to the disclosure, that is fundamental to the user's understanding. This is examinable. What is mean by pervasiveness? Three occasions, it is significant. Even though it is confined for the particular items, it represents the substantial portion and the fundamental for the user's understanding and not confined for specific elements, accounts, or items in the financial statement. Those things you can write. Mm. Forming an opinion on the financial statement. Forming an opinion on the financial statement. Form an opinion. Financial statement are prepared in all material respects in accordance with applicable financial reporting framework. Conclude that conclude as whether the auditor has obtained reasonable assurance. Auditor has obtained a reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, right? Whether sufficient and appropriate audit evidence has been obtained, whether uncorrected misstatement are material, whether uncorrected misstatement are material individually or in aggregate, evaluate whether the financial statement are prepared in all material respects in accordance with applicable financial reporting framework, right? Form of opinion. The financial statement are prepared in all material respects in accordance with applicable financial reporting framework. We give a clear opinion or the unmodified opinion, right? Conclude that based on the audit evidence obtained, the financial statement as a whole not free from material misstatement. If it is not free from material misstatement, it means material misstatement is have unable to obtain sufficient and appropriate audit evidence means scope limitation to conclude that the financial statement as a whole free from material misstatement. That means modified opinion. Modification can be either a qualified disclaimer or adverse opinion on the given circumstances, right? The nature of the material misstatement, the auditor's conclusion on whether the financial statement as a whole are free from material misstatement takes into account the auditor's evaluation of uncorrected misstatements, if any. Misstatement. Difference between reported amount, classification, presentation, or disclosure of a financial statement item and the amount, classification, presentation, or disclosure that is required for the item to be in accordance with applicable financial reporting framework. In simply, the difference between recorded and should need to be record amount. It means in Sinhala, වාර්තා කළ යුතු ප්‍රමාපිතමු අපි ඩේටස්ලා විදියට ලක්ෂ 5යි ඇත්තටම තියෙන්න ඕනේ but අපි රෙකෝඩ් කරලා තියෙන ලක්ෂ 6ක්. The misstatement is difference between those two should be record and actually we record. The difference between should be record and what is recorded in the financial statement are simply called a misstatement, right? Well, the material misstatement for the financial statements may arise in relation to the appropriateness of the selected accounting policies, the application of the selected accounting policies, and the appropriateness or adequacy of the disclosures in the financial statements, right? The appropriateness of the selected accounting policies. Example, the selected accounting policies are not consistent with the applicable financial reporting framework. The financial statement do not correctly describe an accounting policy relating to a significant item in the financial position, the statement of comprehensive income, the statement of changes in equity, or statement of cash flow, or the financial statement do not represent or disclose the underlying transactions and events in a manner that achieves fair presentation, where the entities has changed its selection of accounting policies. The material misstatement of the financial statement may arise when the entity does not comply with these requirements, right? The application of the selected accounting policies. In relation to the application of the selected accounting policies, material misstatement of the financial statement may arise when management has not applied the selected accounting policies consistently. It means uniformity is not there with the financial reporting framework, including when management has not applied the selected accounting policies consistently between the periods, similar transaction and events, right? Due to the method of application of the selected accounting policies, such as unintentional error in the application, right? Right. So give me 1 minute. The appropriateness of adequacy of the disclosure in the financial statement. In relation to the appropriateness or adequacy of the disclosure in the financial statement, material misstatement of the financial statement may arise. Material misstatement of the financial statement may arise when the financial statement do not include the financial statements do not include all of the disclosures required by the applicable financial reporting framework. The disclosures in the financial statement are not presented in accordance with the applicable financial reporting framework, or the financial statement do not provide additional disclosure necessary to achieve fair presentation beyond disclosures specifically required by the applicable financial reporting framework. Nature of an inability to obtain sufficient and appropriate audit evidences. The auditor's inability to obtain sufficient and appropriate audit evidence may arise circumstances beyond the control of the entity. It means, let's say a fire is occurred, it destroyed entire factory. The building accounting records are destroyed due to a fire, right? That is the beyond the entity's control, right? Circumstances relating to the nature of the timing of the auditor's work, limitation imposed by the management. Sometimes you send a data confirmation, management is saying, so these particular data, you cannot send the confirmation likewise without a reasonableness. If there is a reasonableness, the auditor need to keen on that. Otherwise, without any proper reasonableness, auditor need to perform alternative audit procedures if auditor is unable to get in comfort whether the such balances existence, which means the debtors account balances, which is stated as SOFP, the statement of financial position. Auditor need to perform alternative audit procedures if auditor is unable to obtain a sufficient appropriate evidence regarding and comfort regarding the existence of the particular data at the 31st March 2000, let's say 24. Auditor can see the subsequent settlements, the inventory, debtors age analysis, etc. Sometimes auditor can check subsequent settlements and the invoices, which is the sales is occurred. Right. Finally, the type of modification opinion. This is important in your second semester. Secondly, also you may learn these things. Nature of matter giving the rise to the modification. If it is a financial statement are materially misstated, so the you need to see if the such misstatement is material. Such misstatement is material but not pervasive. In this kind of a scenario, we issue a qualified opinion. But such misstatement is material and both pervasive, we issue an adverse opinion, right? So the inability to obtain sufficient and appropriate evidences, material but not pervasive, we give a qualified opinion. Inability to obtain sufficient appropriate evidence means scope limitation, but those are material and both pervasive, we give a disclaimer of opinion. Finally, we will see qualified audit report, adverse and disclaimer of audit opinion report, right? This is SLAuS 701 key audit matter. It is important. For audit of complete set of general purpose financial statement for the listed entity, this is important. PLC is only mainly applicable. The auditor shall communicate CAM in the auditor's report. So you can see the auditor's report. If you are going to Colombo Stock Exchange, let me go to Colombo Stock Exchange, CSE. So go to the CSE and you can see under the CSE, go and log in, let's say, go to the CSE. And out of when you are logging to there, you can search, let's say, Haley's PLC. You can see here, out of that, go to the financials. You can see annual report. Give me 1 minute because it is loading. When you reach to there, if go to the financial statement, the auditor's report is there. The statutory auditor of Hades is Ernst & Young, independent auditor's report you can see. After the basis for opinion, so addressee to the shareholders of Haley's PLC, opinion, basis for opinion para and key audit matter. This is deal with SLAuS 701. Key audit matters in simply, the definition is there. Key audit matter are those matters in our professional judgment based on the auditor's professional judgment were more significant in the audit of the financial statement of the current period. These matters were addressed in the context of our audit, the financial statement as a whole, and informing our opinion thereon. We do not express a separate opinion on key audit matters. For each matter below, our description how our audit address the matters provided in the context. The key audit matter is not a modification to the audit opinion. So be careful. Some students may think the key audit matters are the modification. No, it's not a modification. We have fulfilled our responsibilities describing the auditor's responsibility for the audit of the financial statement section of our audit report, including a relation to the matters. Accordingly, our audit included the performance of the procedure designed to respond to our assessment of the risk of material misstatement of the financial statements. The results of our audit procedures, including the procedures performed to address the matters below, provide the basis for our audit opinion on the company financial statements, right? The key audit matter revenue. Revenue is a key audit matter due to the reasons are there. How you the audit EY is addressing those key audit matter is given later on. We can discuss leisure time. You can read those things, right? The key audit matter. those matters in the auditor's professional judgment, based on the auditor's professional judgment, were more significant financial statement of the current period. Key audit matters selected from the matters communicated to the those charged with governance, right? The purpose and importance of the CAM. The purpose of communicating CAM is to enhance the communicative value of the auditor's report by providing greater transparency from the audit that was performed. CAM provides additional information to the intended users. It means mainly for the shareholders and other stakeholders, intended users of the financial statement to assist them in understanding those matters that in the auditor's professional judgment were more significant in the audit of the financial statement of the current period, right? Assist intended users of the understanding of the entities and areas of the significant management judgment are evolved. CAM uh, communicating key audit matter in the auditor's report is not a substitute for the disclosures in the financial statement, a substitute for the express modified opinion. This is not a substitute for the modification, a substitute for reporting in accordance with SLAuS 570. Material uncertainty that may cause significant doubt ability to continue as a going concern. That is not a substitute for the going concern as a key audit matter. Separate opinion on the individual matters. Those are not applicable in this SLAuS 701. Uh, the SLAuS 705 revised prohibits the auditor from communicating CAM when the audit gives a disclaimer of opinion, because in the disclaimer of opinion, you do not provide any kind of opinion. So rather than saying we have audited, we saying we engage. In our local PLC, you can see we are giving a disclaimer of opinion. Here, independent auditors report, disclaimer of opinion. Rather than saying we have audited, we were engaged in this scenario. You can see disclaimer of opinion basis for that. No key audit matter. Can you see a key audit matter? If you mad enough, only you are saying there is a key audit matter. SLAuS 705 prohibit the auditor from communicating CAM when there is a disclaimer of opinion. Unless such reporting, if it's law required, you can see put, but otherwise in general competency it is not allowed, right? Communication of any key audit matter other than the matters giving rise to the disclaimer of opinion may suggest that the finance statement as a whole are more credible in relation to those matters than would be appropriate in the circumstances and would be inconsistent with the disclaimer of opinion on the finance statement as a whole. Determining CAM, so the auditor shall determine based on the auditor's professional judgment from the matters communicated with those charged with governance, those matters that require significant auditor's attention to performing the audit. In the determination of the key audit matter, the areas high risk, areas riskiness is high, a significant auditor's judgment and the effect of the audit of significant event of transaction occurred during the period. Those are significant management auditor's judgment related to the areas in the final statement that involve significant management judgment, right? So high level of the high degree of the significant management judgment are there. If there is that, it is key audit matter. So let me see that. So I show you that if there is a disclaimer of opinion when we do not have, because disclaimer of opinion you can see in our local PLC, we were engaged rather than saying we are audited, we were engaged of the audit of Navaloka PLC, consolidated finance statement of company and the subsidiaries which comprise the finance portion at 31st March 2022 and the P&L. We do not express an opinion. We do not, we are restrict, we are eliminate, we are not providing any kind of opinion in this regard. Basis for opinion, because due to this reason, we are not providing any kind of opinion. Following matters come to our attention which collectively affect the potential to affect the existence, accuracy, completeness, valuation. These are the assertions in the finance statement. Hospital revenue is not there. We could not obtain sufficient appropriate documentation for the revenue. We were not provided any supporting evidence for the documentation related to the physical verification of the inventory. The group has not provided supporting document for the valuation of inventory, right? Those are the issues in there. The group recorded trade receivable. Further, the group recorded impairment provision. We do not provide external confirmation for the satisfactory audit evidence for debtors. On the balance search, evaluate whether any adjustment is necessary. So the main issues are there. So let's see. So this is a clear opinion. So leisurely you can read, download it from the CSV. I show you how to download. This is a clear opinion. In our opinion, true and fair view. You can see the true and fair view. That also done. After that, you can see the. So again, you can see a clean opinion or the clear or unmodified opinion is there in here. You can see in the KPMG opinion, it is accompanying give true and fair view. This is an unmodified opinion, clear opinion. But here, previously we saw that Navaloka PLC, it is a disclaimer, but in this report, annual report, Navaloka PLC, it is a qualified opinion, except opinion. Yeah. Qualification, qualified opinion, we have audited. In there also we are saying we audited, but in there, key audit matters are there. We want to see the difference, right? Can here key audit matters are there. We are emphasizing a matter. Contingent liability, we draw your attention, material uncertainty relating to co-intention, and we draw your attention. Leisurely, you can read those things. So I read, we have audited the financial statement of the Navaloka PLC. Now, opinion, except for the possible effect in described for basis for qualified opinion, others are okay, free from material misstatement and give true and fair view. Basis for qualified opinion, here you can see what is the basis? Because of the disclaimer of opinion issued in respect of the prior period, we were unable to satisfy ourselves of the accuracy, completeness of the opening balances because last year closing balances is this year opening balances because previous year it is disclaimer. The group and a company have recorded expenses. The group and company have recorded expenses amounting 140.7 million and 234 million respectively as operating expenses for the year ended 31st March 2023. We were not provided with supporting evidence to substantiate these expenses. And you can see the company has identified during the year 31st March 2023 the investment made in the equity accounting investee IAS 28. The Navaloka College PLC also incorrectly recorded. LK said accounting policies are not uniform. Request material prior errors to be corrected retrospectively, but they are corrected prospectively. It is incorrect, right? So those are the issues, and that is the end of the session. Be careful on the I would say SLAuS 701, the key audit matters and the audit reporting part, the format of audit report. So you can see. Let me take a 1 minute more to show you the format of audit report. Uh, so now we going to visit to the CSC again, and here you can see we see John Keels Holding PLC, the financials, and download the annual report. Here you can see the audit report. You go to the audit report. So you can see the audit report. Go to the down. Controller in the Where is that here? So you can see the addressee, title, independent auditors report. It is the title, addressee to the shareholders of John Hughes Holdings, and the opinion, basis for opinion, key audit matters are there. After that, the responsibility of the management and those charged with governance is there, and the auditor's responsibility. Report on the other regulatory requirements and see Sri Lanka membership number, and the signature, date, and practicing location, 13 elements are there. So you want to remember the format, not the Hatapadan style. Be rational. Thank you all and have a nice day.